Right, boys, today we're finally going to be discussing the first presented fair value gap. Now, this is a very specific, time-specific fair value gap that it forms after the opening bell at 9:30. So I'm going to teach you how to identify it, some caveats to maybe when it's an invalid fair value gap or first presented fair value gap, and how you can actually use it in your trading. You could even make a model around it if you wanted to. Now I'm going to talk about the first presented fair value gap and the post-news fair value gap. So we've got two types of time-specific fair value gaps that we're going to go over today. And we're going to go over the past week of trading, and I'm going to basically showcase this entire concept to you and teach it to you as best I can. So let's get into it. So very simply, the first presented fair value gap is the first fair value gap that is going to form after 9:30. Now, what I mean by after 9:30 is that this fair value gap cannot include the 9:29 candle. The first candle it can include is the 9:30 candle. So for example, here we have 9:28, 29, 30. So this fair value gap here, some people would label as the first presented fair value gap. This is an invalid one because it includes, yes, the 9:30 candle, but it also includes the 9:29 candle, the 9:28 candle. So this would not be the first presented fair value gap. What would be the first presented fair value gap? I'm going to say that so many times in this video, so I'm just going to start saying fair value gap. Would be this fair value gap right here. So we extend that across, and what you want to do with this fair value gap is extend it throughout the entire day. So I have a little template here, first fair value gap, or I click that, the template extends and labels it as first presented fair value gap, and it will extend that to the right throughout the entire day or the entire week if I wanted to. So there are a couple things that we wanted to note specifically about Monday's first presented fair value gap, because that is not only the first fair value gap of that day, it's the first fair value gap of that week. So we can actually extend this fair value gap throughout the entire week, and you'll I treat these kind of like a new week opening gap, new week, new day opening gaps. You'll see the price is going to magnetate towards it and bounce off of it, and we can look for reactions off of it during specific times like macros, and we can look for trades, for example, right when the fair value gap gets hit if you're that confident in the setup, or you can look for a reaction off of the first presented fair value gap, and the next fair value gap that forms in that run is a fair value gap that we can use for like a silver bullet trade, for example. So between the hours of 10 a.m. to 11 a.m. for the morning session, we can look for that type of reaction from the first presented fair value gap and look for the next fair value gap that forms off of a run from that first presented fair value gap and take that trade. But like I said, if you were confident enough, like this, for example, is a 2022 model, as we can see on Monday, ran up, swept buy side, displaced lower. So you can kind of use it in combination with the 2022 model also. If you're looking for like a 9:30 entry, for example, you can use this fair value gap as kind of an added concept to the 2022 model. You could be like, okay, not only is it a 2022 model and hits all the criteria for a 2022 model, it just so happens to also be using the first presented fair value gap. So the concepts, models, the ICT ways of viewing the market are all starting to link, and then you can be more confident in a trade setup essentially. And I mean, as you can see on this Monday's price action, for example, this is not like cherry picked. This is just me going over every day of the week. So you will see later in the week maybe where the first presented fair value gap wasn't this good, but on this day, for example, we tapped right into it, as obviously you want to include the volume imbalance in the fair value gap, and then we melted off for the rest of that day. So, I mean, not a bad setup to start the video off there. But what I will do now is I will delete this bit that says first presented fair value gap, and I will label it Monday's first presented. I'll just put a P and a comma, Monday's first presented fair value gap. So now I know that that is Monday's specifically. So here we are in Tuesday morning's price action now. You can see the 9:30 open right here, this big black down close candle. And the first presented fair value gap for Monday is actually a smaller fair value gap within Monday's first presented fair value gap. So it's right here. What I'm going to do, just to save me having two boxes crossing each other, is I'm going to outline Tuesdays with two arrows. So I'll make two black arrows. So you can see Tuesday's first presented fair value gap right there to this candle's body high, because we have to conclude the volume imbalance, and the low of this 938 candle. And once again, price taps into this fair value gap and then runs higher. We did on this day actually have some relative equal highs right over here. You can see We have London high from Tuesday, so that's a nice run from a first presented fair value gap to session liquidity. So that's, again, adding in all these concepts, all these ideas of time and liquidity and fair value gaps, all adding in together. And also on this day, we had this daily volume imbalance here that was reached up into. So if I outline that, we can see that daily volume imbalance outlined in orange, and the first presented fair value gap run started here, ran up, and eventually reached up into that daily volume imbalance. So another fantastic run there. So now here we are again on Wednesday's price actions, the next day of the week now. So on this day, the fair value gap formed at 9.35 and was then blown through. So if you were for some reason trying to short this, I don't know, maybe you saw some relative equal lows down here. I mean, there weren't really any great ones. There were these smooth lows down here, but nothing on like a high time frame, nothing that's obvious and jumping out to me at least. And with the added fact that we've been going up the past few days, it's hard to say what your bias would have been on this day just based on your personal analysis. Obviously, you might have been short. In this case, that would have been a losing trade, or you might have been long. Now, if we are long and we are wanting to trade in the direction of our bias, then the first presented fair value gap, we can not only use to trade in the direction that it prints. So this is a bearish fair value gap. So not only can you trade this in a short because it's a bearish fair value gap, you can also, if you have a bullish bias, you can wait for it to be traded through and then come down and retest and use it as an inversion fair value gap, which in this case you can see if you wanted to reach up for Tuesday's daily high, which is another reason that you might have been bullish today. We're so close to this daily liquidity level, so you might want to trade up to that perhaps. Then you can see that obviously that would have played out pretty well, and you could have traded that inversion play off of the first presented fair value gap. If you were wanting to short today, then the setup actually came later in the day. So after sweeping the previous day's high, we then obviously started our move lower, which obviously is something you could expect. After sweeping such significant daily liquidity, we then displaced below the first presented fair value gap. So you can kind of use this as intuition for, okay, we are shifting downwards now. We are going to reach for something lower because we have reached below this kind of tipping point, the first presented fair value gap of the day. And we then closed below it, came back up to it, retraced, fell just short of it actually. So I believe the low of this is 953.75. The high of this candle, one tick below that. So that isn't a short there if you're trying for the inversion play. But once we reject from that, we could look to trade any of these fair value gaps. And obviously, if you entered on this one, that was perfectly fine. If you were entering on this higher one, you wouldn't have got filled, but you wouldn't have lost. So just no trade there. But if you did get filled on this lower one, obviously you can see we are entering a macro there, and you could reach for some liquidity on the left side of the curve over here and get a nice little run there. A bit of a mixed day on this one. You definitely could see why someone would lose a trade on this day, but you could also see some winning setups in this day as well. So now we've gotten to the point in the video where we can look at the post-news fair value gap. Now, the post-news fair value gap is the first fair value gap that's going to form after an 8:30 news release. I really like this fair value gap, and after a few months of looking at it and drawing it out, when I notice it, you will see that a lot of times it is a very useful fair value gap to have marked out on your charts. This is also a time where we can identify where fair value gaps maybe aren't valid, and you want to maybe wait until the one after that. So this was taught by ICT very recently in the 2025 mentorship. Essentially, you would think that after 8:30, which is this candle here, the first presented or the post-news fair value gap would be this one. In fact, according to what ICT has taught in the video and what I understand from it, this is not a fair value gap you want to be highlighting as a significant one like I've been showing you in this video today, because if you look left, this range here, this up and down candle is balanced. We have gone up and then come straight back down in one candle in either direction. That is a balanced price range. When we have this fair value gap here and it's alongside that balanced price range, then it's not a significant fair value gap that we want to have drawn out. We want to have the one that's kind of breaking away from that balanced price range, and that would in fact be this fair value gap up here. So I would identify this fair value gap and label it as the post-news fair value gap, and I will just use this for this day. Any other first presented fair value gap, so what I mean by that is a 9:30 fair value gap, the one that I've taught you so far in this video, I will extend those for the next 3 days. I will have emphasis on the one that's printed that day, but I will always have the one that is printed that day. So for example, if it was Wednesday, I would have Wednesday's fair value gap, I would have Tuesday's fair value gap, and I would have Monday's fair value gap. So I'd have 3 days worth of first presented fair value gaps on my screen, just because I find that price does tend to bounce off these areas. Maybe it'll come back up to yesterday's first presented fair value gap and treat it kind of in the same way. It'll break above it, break below it, come back, retest it, then a fair value gap will print, and then you could take that during a silver bullet hour, and that's a whole model right there if you wanted to use the silver bullet in combination with first presented fair value gap. So I've just gave you a whole model. Go try it, back test it, and if it works, come back and show me what you did. But anyway, this was the post-news fair value gap of this day, so you can see we bounced around. We did close below it, so it's not ideal. Ideally, you want to see the bodies respecting these fair value gaps, but we did mess around in this area, and then we began moving upwards, and then we ended up printing the first presented fair value gap of this day, this Thursday, and as you can see, it just continued to run away. Now, this obviously will happen sometimes, and there's not a whole lot you can do about it because this isn't 100%, it's going to hit the first presented fair value gap and run straight to your draw on liquidity every single time. Because if that was the case, then, I mean, we'd all be billionaires. But so it's not going to happen every single day. Some days it will just run off like this. And these are actually days where I will look for the first presented fair value gap to be used the next day. If it wasn't tagged in at all, that is possibly something I've heard from ICT. I can't actually remember, but it's definitely something I've noticed in my own experience. If a fair value gap isn't tagged into at all during that day, it just does this, forms and runs away. Then the next day, I will look for that fair value gap to be used if we are in close proximity to it. But even though this fair value gap wasn't used at all, we can see that Wednesday's fair value gap, like I've just mentioned, was closed up through and then retested. So this is enough of a close through and retest for me. And then we could look for a fair value gap after that to get long for a silver bullet narrative, essentially. But I mean, on this day, it was pretty tough to get into this move just because it really just carried on running, and I wouldn't have felt comfortable personally taking any of these long setups. Maybe you would have, but I certainly wasn't. And now on Friday's price action, we can see that we just had a consolidation day. So this kind of just banged around all day, didn't really use the first presented fair value gap here. It was actually a 2022 model entry. We did sweep some buy side and then displace with the fair value gap. I did in fact take this trade and I lost, but you know what? I was perfectly happy with that because we had literally everything going for this trade, in my opinion. It was a Friday after a large expansion week, so I was anticipating somewhat of a retracement on the weekly range. We had equal lows, so I was anticipating them to be a draw, and we displaced below a swing low with the first presented fair value gap after sweeping buy side liquidity at a specific time where I would expect that to happen. So sometimes you lose trades, and that is perfectly okay as long as you are following your rules, and it was a good trade, and this was, and I was happy with it. So on this day, we kind of just consolidated, bounced around, but I mean, later in the day, in the lunch session, going into the lunch session, you can see we bounced right off that first presented fair value gap and then continued a run up. So that's cool. I mean, I don't really see much of an entry mechanism here. Maybe you do. I don't personally, but it's still cool to see that price is bouncing right off of these specific fair value gaps. And yeah, that is kind of all I wanted to show you. I wanted to just show you the power of these first presented fair value gaps, both post news, so post 8:30 news, and the 9:30 fair value gap. I've given you the rules to make sure you're identifying them correctly, and as well to know when maybe they are invalid using balanced price ranges. If you want to go and look at ICT's content and get a bit more of an in-depth information about the first presented fair value gap, then by all means do so. I've just tried to teach this to the best of my ability, and if you have learned anything, I would appreciate a like and subscribe so I can get this channel to where I want it to be. But that is all from me, guys. If you're going to be trading this week, then I will wish you good luck, good trading. Catch you later, boys.